Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, man. I am super late. I need to get my head in the game here, guys. We got some news coming through here. U.S. core PCE prices advanced 4.9 versus 4.7. GDP deflator 4.0 versus 3.7. PCE prices 4.2. Initial jobless claims 230 versus 248. Like, this is okay. So this looks inflationary. Market is like really reacting extremely adversely to this. Interestingly enough, they're not to 4.9. There's not enough liquidity for me to really touch this right now. It's okay. I don't think I would have been able to touch it. If it was like initially and I was sitting there, I might have done something, but it's like way too late now. So let's go to the charts real quick. Okay, so you can see here, treasuries got, we had like a big push up, and then after that, it was just all down, probably for the auction, and now here again this morning, all down. I do believe that a lot of this upside was kind of more technical, and this downside is probably a little bit more fundamental driven. So keep that in mind. S&P 500 was recovering before this, so I don't know, recovering from yesterday's downside. Oil got just creamed yesterday. Wow. Gold and silver here kind of still middling, although I would expect we'll come back out here and look in a second. Copper still kind of struggling as well. Wow, gold went both ways. That's interesting. Okay, so off of that news, Bitcoin took like a huge dump out of nowhere. Some people saying that it was like the US government dumping some coins. I don't know about that. And then the dollar is rising here again, but you know, like dollar's up from yesterday, from the lows of yesterday. It's in the middle. Man, the dollar's been all over the place. Actually, look at that. That is generally lower though. That is generally lower for the dollar. Okay, so the treasuries are pulling back like Mondo time here. Oh man. Wow, well. This is a bit much. There's a lot of movement in the treasury. Wow. Actually a little surprised that they're able to trade here in the micros. Okay, we're everything else good here. You guys all there? I think we're there. I think we're good there. It's like right into the fire here this morning. Jim Iorio, kind of a stagflationary GDP number. Yeah, no kidding. No kidding. Okay, they're moving here a little bit. Some resistance there. Over on this one, I'm gonna I have a muffin here. I'm going to take a few bites. So they haven't quite tagged 3.5 in the 10-year. That seems like a likely price at this point, doesn't it? But they're gonna toy with it a little bit, I think. Hi, good morning. I don't know how to say your name. Where you gay? Jobless claims hover near 17 months high. Flash recession signal, says Zero Hedge. Let's read. In the new post-revision world of jobless claims, the number of Americans paying for unemployment benefits for the first dropped modestly last week from 246 to 230, but remains well above the 200K Maginot line. Continuing claims was practically flat from the prior week at 1.88 million. Both measures of the labor market remain near 17-month highs. Finally, as a reminder, the ongoing deterioration in continuing claims data across U.S. states is consistent with a recession beginning very soon. The picture is unassailable. The percentage of states with continuing claims rising more than 30% on an annual basis has never reached its current level and not gone on to rapidly spike much higher, and this has always happened concurrent with a recession. One more point of interest: this week's claims data coincides with the non-farm payrolls survey window. Interesting. So they're saying that this data gets factored into next week's non-farms. Okay, well, Treasury is still quite volatile here. I've kind of got an odd spot. So I think we just kind of have to hold on for dear life. And while I'm thinking about it, of interest today, we do have 7-year Treasury auction today, so we kind of got to keep an eye out for some tomfoolery over in there. Yesterday, I think that auction was a significant factor behind why they sold off so crazy. That was a weird. Yesterday was a weird move in Treasuries. I've seen something like that before. I remember a trade like that happening to me before, where it was like, yeah, big news event came out. I thought, oh, this is a big deal. Went long, and it never held. And then just ever after that, it was down, 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 down. Very, very frustrating. But you know, this time around, we kind of knew what the flows were. So, but you know, really playing with the games, it was like the professionals toying with the speculators. Yeah. Question though is the flows based on the treasuries still going to be slightly negative? That's I can't tell. I don't know. Unsure. That number sure seems inflationary though. Like I would be a little weird for them to not get above 3.5 in my opinion. But that's based on the fundamentals. Remember, the orders are what matters, not the fundamentals. Man, are they really going to have that difficult of a time getting any volume to trade at 15.050? So 06 is now the point of control. And there's no volume going off at 05, which was the point of control before. It's a little disconcerting to me. There we go. Whoa, what's this? Federal Reserve Chairman Jerome Powell held a call with a pair of Russian pranksters posing as Ukrainian President Volodymyr Zelensky, according to a video shown on Russian state television. Okay, so that he's not the first person to fall victim to this prank. Apparently thinking he was speaking to Zelensky, the video shows Powell answering questions on topics ranging from the outlook for inflation to the Russian central bank. There were several clips lasting about 15 minutes, and it's unclear if the footage was altered. Chair Powell participated in conversation in January with someone who misrepresented himself as the Ukrainian president. Fed spokesperson said Thursday it was a friendly conversation and took place in the context of our standing and support for the Ukrainian people in this challenging time. No sensitive or confidential information was disclosed. Okay. Still, that's like, whoa. Okay, so like they were toying with it at 05. They're like, we don't want to do it, and then it went through on no volume. So like here we are. We did tick barely. Oh no, actually we did not. It touched the low. It did not tick a new low in the 10-year treasury quite yet. Seems a little reluctant to go, or maybe somebody's fighting it. Here's Skanda Armas says GDP downside surprise is not primarily about retail sales revisions, which were an overstated reason for the Atlanta Fed downgrade. Disappointment was largely about inventories, which you should ignore. Okay. It's kind of interesting. They'll come up into here. They'll maybe be a little bit reluctant to go through, but then when it does go, it just biddish, right? But it's able to cross this area between, let's say, 06 and 04 very, very easily. And I find it interesting that it's kind of like it's able to rest up here and then it flips down and comes back up and then it comes back to rest here. Because you would think that if there's a liquidity hole all the way between here, that they should be able to get to, say, 05, for instance. So that's a little bit odd. I do see the volume in the 5-year continues to be mostly to the downside. The spreads are flattening, which is what I would expect if we're on a downside move. The S&P 500 is reverting back quite a bit. So here they are testing that. No? Okay, so 06 half. So I'm just thinking about the earlier in the week and how we had a pretty strong reaction to a news headline about FRC. Now that one is a little bit iffy because I'm not sure how serious the FRC thing is right now, right? Like the treasury market reacted to it really strongly. The larger market did not. And while I'm sitting here like, you know, thinking maybe the FDIC will step in at any moment and have to come in and do something, for now it doesn't look like that's happening, and probably not today either. After a day, you know, of this going on. But it's just interesting to me that there was like such a strong reaction on that news, and it did not matter to the order flows in the treasury at all, right? They ended up being to down. Well, should I scratch it? I mean, I've had +10 for and against me. So I think that what it's showing me right now is that I kind of caught more the middle of the range rather than the other side of it. I think that you probably shouldn't try and convince me to do something because I'm just gonna fight against anything that anybody tells me. Right. But so I'm coming in here and it's like, okay, so we just had another big data point. There was a very strong reaction to the initial data point. It's not like I'm seeing the flows contradicting the news. Like if I was seeing us at like highs in cumulative delta, then I would really be like, okay, something's wrong, right? It's not quite like that. But there is a little bit more fight against them breaking new lows and against them getting to 3.5 than I certainly had expected, right? So what's going on there? Are there still some technical buying flows in here? Well, I tell you what, here on the market making, you know, on my up here in ZN, it's been working really well for me so far. So I don't know if I want to do 3 if it comes back up there. If it comes back up there, I want to see where what prices it's doing first. So I won't leave the order, but I will take some more if it comes back up to my average position. But you know, so just like this one, so we had a little bit of a downturn. I'm not sure the sell orders are out there, you know? So I'm like thinking about, you know, all this technical positioning and everything that's been happening. And then we get a data point that really suggests higher interest rates, I think. And the amount of selling on it, well, let's see here, 150 to 130. So 20K net sell on a day that I think we could get to like -60, you know, 60K net sell, if not more than that. You know, kind of makes me think that the hedge funds and so forth are still more concerned about some of the technical aspects of things. Okay, well, there's 1,000 lot at 03. I don't know, but the another thing to look at with all of this is that it was 20K net selling, and that's a lot of selling that really disrupts the market. And so it may just take them time in order for everybody to like rebalance and get back to the point where they can muster up the market selling to take it slower, right? What the heck? Police were called to a York Catholic school board meeting after an angry crowd opposed raising the pride flag. Well, yeah, at a Catholic school. What? Jordan Peterson says enough pride, it's a sin after all. The cardinal sin, absolute Failure to hit the mark. Okay. Thanks for contributing to the conversation, Mr. Peterson. That was a kind of a dumb comment for him, but okay. They did take a new low that time. You wanted me to get rid of it. Are you guys? I don't know, man. Chat, we need to talk. Because that's like the second or third time this week that you guys have tried to convince me to get out of a winner. There was that one where where it was like a lot of you were like, "No, I don't know if I like the trade, etc., etc., etc." And then it did go against me, and so I got out. And then, like, as soon as I got out, it went my way, and I jumped back in and made money in the end. Like, there was that one too, right? Oh, we just okay. So here's how I think we should approach this stuff, though, right? What information do we have that might possibly predict flows, right? So, like, especially if you had information that was like, well, CTAs still have X amount to buy, then I would definitely be like, that's actually a really good point. Maybe I don't. Maybe the downside is limited. You know what I mean? Because otherwise, the reality is that we're making a lot of judgments based on our feelings, right? Because I'm not gonna lie, I see when that came back up to 06 half, I didn't want to scratch it, but it certainly made me feel uncomfortable, you know? And the thing that keeps going through my mind, yeah, I think the previous swing was kind of overly strong. Yeah, well, they've been able to trade across this range right here between 06 and 04 pretty freely, right? It pauses up here, pauses down here. The thing that I think is kind of funny is that you would think it'd be like, it goes up and they're not able to muster the volume to go long. It goes down, they're not able to muster the volume to continue going down. But what I see instead is like, it comes down, I'm actually seeing some long volume there, and like there's like resistance there magically. Like right in that spot where they've been able to go across cleanly, there's like, they don't want to hit it. And they're doing that on both sides. That's not something that's not a situation that I've recognized before. I'm sure it's happened before and I've just never noticed, but it's a little weird and I'm not quite sure what to do about it. Other than maybe to try and trade across that range. But I'm still like thinking about, what was it? Tuesday? I think it was Tuesday where, I had a good trade and I could have pushed it. And I was too nervous. I let the emotions get me out of it early, What was that strong move on the 24th and 25th? I really think that it was mostly technicals, to be honest with you, Mr. M. I think so. For instance, risk parity was involved in there. CTAs were involved. I really think that it was like technical buying from large funds. Yeah, now it lost all of its momentum. Well, look, they're not trading big numbers between 06 and 04. I don't think that they've traded 1,000. There's been a 1,000 per tick in this whole range. Like 400 there at 04 half is actually maybe the biggest one that we've had so far. Right? It's a little weird. Because the way that I would expect this to play out is to see a big amount of volume at like 04 half or maybe even 03, and then difficulty moving away from that, And it's kind of almost the opposite, but ends up being kind of the same thing. Is like there's no volume in there, but you get volume on the edges, and they have a difficulty getting around that. What is on May 10th? What is the difference between the purple, red, and green limit orders on the DOM? Oh, okay, so it's blue. Are you colorblind? I'm colorblind with those same colors, so don't feel bad about it. So if it's orange, red, then it's a sell order. And if it's blue, then it's a buy order, right? Now I can also set, so for instance here, if I wanted to stop into this, I could set a one, you see how it says a 1S V250. So that means that it would stop, it would enter a stop order. It would enter a market order if there was less than 250 on the bid at 03. That's what that one means. So generally the way to read this is my average position is from the orange red price, 115.06 half. That's where my average position is, but I've already taken some profits. So I'm not underwater overall on the trade until we get to 115.13, right? If I add another contract at 06 half, then that break-even point should come in quite a bit, right? That break-even point will move down a little bit. You can kind of use that information to kind of track your position and manage your risk. Oh, maybe you're talking about the inside columns. $40.99. Okay, so oh really? What? No. Okay, so let me try to explain a couple of other things, okay? This column right here, this orange red column, is limit sell orders. So those are people with sell orders sitting waiting in the queue to get filled, right? Similarly, this blue column, limit buy orders, okay? These middle columns are the market orders. So like if we want to, if it's going to trade up, they need to trade against all of the orders at 0.5 half. And so you'll see that in this little cell right here, right? Okay. And what happens is if you move away from that price and come back to it, it will go back to zero, so that I can kind of see each time that it ticks up, how many orders did it take for it to tick up, right? So like that time it took about 976 orders for it to tick up. But then look, it didn't stay, it went offer again. Not a strong offer, but it went offer again, right? Okay. And then this column over here is the volume profile. So that's how much volume has traded there throughout the entire session. Okay. And this orange price right here is the volume weighted average price. Okay. It's the VWAP. So that's basically taking all of the volume and the price that it was traded at and adding it all together and then dividing it by the volume, and you get the average price at the volume. You know, you get a average price weighted by volume. Okay. This if you look over at the S&P 500, there's this kind of pinkish price right here at 40.96. That is the point of control. Yes, that's the histogram. That's the volume profile. That's what we call it. That pink price is the price that has the most volume traded at it. So it kind of shifted. At the moment, the VWAP and the point of control are the same at 115.060. Right. So some people believe, I just opened my eyes for the day, so I'm lagging. Yeah, no, it's fine. If you've never looked at it before, it's really confusing, right? I tell you what, there is a, so to me, it's just second nature, just because I'm looking at it every day, and I think that's the way that you're gonna see it, as like do this is like, okay, you're gonna be looking at it and you're gonna be like, wow, this is really complicated and I don't understand what's going on. But then you go through and you ask yourself, okay, this column is limit sells, this column is limit buys, these are market buys, market sells, the price, volume profile, my average profit so far, right? And you're going to go back and you're going to say, oh, like, I totally understand it. It's just, for some reason, I'm having a hard time processing it because it's so new, right? And it is because what's going to happen is your brain is going to like sort out the connections and everything. So here's how I think that we should think about the brain. Is like a neural network, because the neural network is the whole thing right now because of AI and machine learning and all of that stuff. Okay, this is a big sell right there at 03.5. They took out 1,800 contracts. It's a neural network, but the thing that's special about our neural network compared to like a computer's neural network is, one, we're able to constantly change our neural network. That's something that, so for instance, ChatGPT, they're working on a change to GPT that allows them to process like 1 million new tokens at once into the model, so that it's constantly improving the model based on inputting data. So like if I wanted to make something using GPT-4 that was based on the market and was taking in like new information, right now, I can't do it. I'm kind of waiting for them to put that in, right? Okay, but then the other thing is that our brain can completely switch the network. They can say, okay, here's the context. It can instantly go into, okay, here's the context, do the calculation. Here's the context, do the calculation. And so it can switch which learned network to use based on context, right? So I'll give you an interesting example. I don't know if you've seen this stuff on, there's a lot of stuff online about autism right now, because a lot of people are realizing that they had mild autism or ADHD and were like never diagnosed, and then they're getting out on TikTok and they're like, oh, I'm autistic, and identifying with that community and stuff like that, right? And one of the things that they talk about is masking. Is like they've learned that there are certain behaviors that they naturally do that are a big turnoff to other people, and so they have to mask to do it. But the thing is that everybody masks. Normal people are things that they want to do and they don't do them, and they take on a persona based on certain social situations. Everybody's always masking, right? And what is masking? Masking is putting that neural network on to interpret that certain social situation, right? Because that's why our brains developed this kind of a network, was to be able to deal with complex social situations, because it's very, very good at that, right? There's a lot of nuance, there's lots of different pieces of information that you have to factor in to your decisions, and you have to be able to react very, very quickly in a fluid situation. And that's what a neural network is really, really good at, right? It's making these really fast decisions based on large amount of information, right? Everybody's always masking. It's just a neurotypical person can put that mask on very easily. It's effortless to them, because their neural network works at its peak. Whereas a person with ADHD, or especially with autism, has a difficult time doing that. The nerve cells have difficulty making those connections and shifting, right? So when you're learning how to trade the DOM, that's kind of what you're doing, is you're training that neural network and making the connections, right? So what we've got to do, the first thing, the most important thing, is to have a correct understanding first. You need to understand what you're looking at, which is what I'm trying to tell you about, in those order flow videos that I have on the channel is just, and that was just the basics of order flow. This is what you're looking at. And these are the sorts of things that you'll tend to see. Iceberging, catching the edge, etc., 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 right? And then I come in and I say, okay, here is like what we're actually trying to do is trying to predict orders. So this is where you're trying to make your edge, right? Now that you have all of that information, you can train your network properly to be able to actually kind of see things in the DOM and get some reads about what the current conditions are and what might be favorable or unfavorable to your trade, right? So when you're starting out, it's going to feel like you're lagging all the time and stuff. It's because your brain's still calibrating. And after you've done it for a few months, you're going to feel more confident. And after you've done it for a few years, you're going to start like seeing things and you might not even realize what you're seeing or how you see it. You might not even be able to explain it to people. Like I can tell you, oh, I saw this. I'm not sure I'm able to explain to you guys sometimes why I think it's worth noting, you know? Let's Redditize fake it till you make it. What language? So Jigsaw was largely written in C#. C# is really good at doing these kind of GUI elements with lots of things shifting. Oh, wow. Okay, so they came back to the lows. They did not reach 0.5, but they were very, very willing to trade at 0.5. Not quite a new low there yet. Looks like there's a little bit of profit taking at 0.5 first. But the sellers would seem to be very willing to go with it. That was one of the that was the largest change in cumulative delta on a bar basis since 5 minutes after the news. So for the past 35 minutes. Can we write scripts for Jigsaw? Not at the moment. They've talked about it. I don't know where that might be on their roadmap. Thing is, they've spent so much time trying to improve the charts. I think they have a relatively major release still coming up. And then I think that we're going to get some other things that are kind of essential, like I shared some information with them about how to make spread charts, for instance. I hope someday that you might be able to write scripts for it, though. If it's on their roadmap, we might get there by 2098. Yeah. I think that, I mean, developing a chart is a really complicated thing, right? And even though they had like a pretty solid starting point, you know, you can just see how difficult it's been for them to make relatively mild changes. Hopefully they're going to get to the point now where like most of the major systems are done and like further changes to the charts aren't as complicated, but man, it has taken them a long time. But I don't think we realize how complicated writing that can be. Right? We may be in the next leg of a meta order. If you, in the Vista chart settings, if you flip the chart to 10 levels, it never saves, it always reverts back to 5. Does it do that to you even if you like start from a completely clean workspace? Because on that one, if you can like duplicate the behavior with a completely clean workspace and you submit a ticket to support, I bet I forget what their name is, but they got a girl that's kind of does the QA stuff and chases up on those things, and I bet you they'd be really interested in chasing that one. But I think what's more likely going on is like, so in C#, there's a lot of what they call, okay, I'm going to go really deep into something so that to try and understand making GUIs in C#, okay? So it used to be in the day that you would use C# forms, okay? Which was basically like you would have a piece of code that would say, create a text box. And then when this happens, you modify the text box, okay? Well, that kind of code is really complicated to write and difficult to maintain because you end up having like all of these tiny little events everywhere and you have to write code for every event. And when you're doing that for a rich GUI, it ends up being a monster, right? So they came up with a new paradigm called MVVM, which is model, view, model view. Which, okay, so the model is like the data underneath. So the model might be, I have a price and the under the price you have the volume profile, the limit orders, the sell limit orders, the market buys, the market sells, or whatever, right? And that's the model, right? And then you have the view, which is what you see, right? Oh, it's a grid. It looks like this, right? And then there's a model view, and the model view basically describes how the model and the view are related to each other and how they modify each other, okay? So then you get into this sort of a thing where when the model changes, the view updates itself automatically to what the model is, right? And once you have that framework together, something that you can do is you can say, take the model and export it to an XML file. Okay, so you can have this model that says, here are all of the settings, right? For my setup here. Here's all the settings, blah, 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 export it to the file. And then next time you load things up, you create that model from the file, stick it in, and now you have all of your settings and it comes right back right away, right? Or it should come right back right away. Something I've found in Jigsaw is that there appears to be a couple of places, and this is really common with model view applications, and I think is maybe part of the reason why Microsoft kind of abandoned it. But you will get these situations where it just doesn't do it correctly. Like for whatever reason, a certain property doesn't get exported or imported correctly, or whatever the deal is. And it's usually not like something that happens all the time. It's like your model gets screwed up in a certain way, and then the model view can't translate it correctly. So that's why I'm saying, if you can do it on like a completely clean workspace and make it happen, then they would definitely look at it, because they should be able to find a bug and change something in there very easily, right? But what it's probably more likely is like something in your Jigsaw is screwed up and it's in the XML and it's in like the default template that you've saved or whatever the deal is, and so it keeps popping up. And so to fix that, they would either have to have you like send over your files, or probably more likely just have you reset things. So for instance, for you, Uzi, you changed computers. So assuming that you didn't copy any of your templates over from the old computer and you just did it all from scratch when you installed it on your new computer, and you're still seeing it, then you should definitely submit a ticket. That doesn't happen to me though. That was like way too much. I feel it's the investment more than the complication. I'm not sure what you were meant by that. To me, choosing a trading platform is an investment, right? Oh, you did copy your template over, actually. Yeah. So what I would do is delete all your templates, have Jigsaw start from the default ones that Jigsaw wants, that creates on it opening up, and then recreate it through the GUI, right? Which might take some time, but recreate it, and I bet you that the problem goes away because there's probably an error saved in your template. And in that, see, this is where the model view and stuff can get really complicated. Is like somebody saves a file, and then you change the model in the code, could potentially screw up the stuff that they save, and you try and make it backwards compatible, but it doesn't always quite work that way, right? And this is where you can get some odd bugs that would be really difficult to duplicate, right? Oh, GUI development of trading applications is such an interesting thing. I should get into it more. Every time I talk about this, I'm like, man, Seth, you know a lot about this stuff that would be really valuable to anybody developing one of these applications. You should probably be working for one of them instead of for a health insurance exchange. I look at that all the time at NinjaTrader. I was like, dude, I've got like 15 things that if you gave me access to the NinjaTrader code base, I would put into the code to come out in the next release. That would be like major changes, major improvements to NinjaTrader. You know? Oh man. And then I would probably be stuck. Then I would probably be like, okay, let's try and fix this bug. And oh my gosh, this is such a hard bug to fix. Oh, hey, you know what? Let's come back to zero hedge. You know, I'm being ADHD, like just moving to something completely different. But I never read a whole lot about those GDP numbers, right? What the heck? Okay. With the Atlanta Fed showing a clear shutdown in U.S. GDP in recent weeks, revealing estimates of U.S. growth sliding from over 3% in late March to just 1.1% yesterday, the trend is clear. U.S. economy is rapidly slowing down in large part due to a depressurization event among small and medium-sized regional banks that has seen loan issuance grind to a halt. As such, today's first estimate of quarter one GDP would be interesting if very much dated. And so, with most banks expecting a print just around 2.2%, the median forecast was at 1.9%. There was an almost palpable gasp at 8:30 when the BEA reported that in quarter one, real GDP rose just 1.1%, which only Barclays and Wells Fargo had an estimate lower than that. Everybody else was higher. Goldman was 1.5. Okay. 1.070% to be precise, and smack right on top of what the Atlanta Fed said it would be. Barely above the lowest estimate and a big drop from the 2.6% GDP in quarter four. It was also the lowest GDP print since quarter two of 2022 when growth was negative to the tune of -0.6. The deceleration primarily reflected a downturn in inventory investment and a slowdown in business investment. Okay, so that is a kind of a leading indicator, right? That is concerning that's going down, right? These movements were partly offset by an acceleration in moving in consumer spending, a smaller decrease in housing investment, and an upturn in imports. Imports also turned up. So there was somebody earlier was noting that, and they're saying, well, you can largely ignore it. Well, I would say that it's a leading indicator, but it's like a very unreliable one. Like inventories can shift very quickly, right? Dang. These movements were partly offset by an acceleration in consumer spending, a smaller decrease in housing investment, and an upturn in exports. Imports also turned up. You know what, though? So something that I've been seeing in this economy is that there is a lot of like, you'll spend a little bit and then you're like, nah, I need to be careful. Things are still tough. I need to save up, etc., etc., etc. And then you put it off for so long, and then you end up having to do another spree or whatever the deal is, right? And so we keep like having future, and you know, we keep moving demand around, and so you're gonna get that where it rises and then it comes back down real quick. Okay. Looking at the components, we find that while personal spending came in just a tad weaker than expected at 3.7% annualized versus an expected 4% last quarter, it was the plunge in private inventories that hammered the GDP print as we warned it would last quarter. Specifically, quarter one private inventories subtracted a whopping 2.3% from the bottom line GDP print of 1.1%. I'm not going to go through like the big stuff. Okay, now PCE. Well, growth came in well below expectations. What the market was really freaked out about was the unexpectedly hot PCE and core PCE prints. The former coming in at 4% above the 3.7% expected and higher than the 3.9% in quarter four, while core PCE came in at 4.9%, well above the 4.4% in quarter four and also hotter than the 4.7% expected. In fact, as shown below, this was the fifth consecutive beat of median core PCE expectations. Gross domestic personal consumption expenditures prices increased 4.2% in the first quarter after increasing 3.7% in the fourth quarter. Bloomberg intelligence chief U.S. interest rate strategy Ira Jersey said the higher than expected inflation numbers from the first quarter GDP report suggests the March PCE deflator due out tomorrow might top expectations that were in place before today's report. The Treasury market is focused on the inflation data, and the bear steepening of the knee-jerk reaction seems appropriate to us, but tomorrow's data will likely seal the Fed hiking 25 basis points at the next week's meeting and leave another move in June on the table, though with caution given the weaker than expected consumption in today's data release. Chris Zaccarelli, chief investment officer at Independent Advisor and Alliance, had a far more downbeat view. He said that this morning's data was the worst of both worlds, with growth down and inflation up. Given that core PCE is nowhere near the Fed's 2% target, the Fed clearly needs to keep raising rates, and they're going to be raising rates right into a slowdown. We are beginning to worry that stagflation is a real possibility. You know, it's really interesting to talk about stagflation, because we keep talking about stagflation as a, concern in the future. It seems to me like we've already had a lot of stagflation, wouldn't you say? It's been like 2 years of sideways growth with high inflation. Isn't that stagflation? I actually found a line of code in the template file that sets the flip chart levels. It says 5 in the code. I wonder if I change it to 10, it'll fix. So maybe. But that's what I'm saying, like, if it's like the wrong property or there's some compatibility, probably, I don't know, you can get all sorts of weird stuff, right? Okay, but we had like we had a reversion back up to 0.2 was as high back as it got. Okay, so that was a story. That's next story. I have to talk about this one. I'm sorry. Democrats in the House and the Senate have floated legislation that would allow undocumented entrants to effectively walk into the U.S. unrestricted if they declare that they are LGBTQ+, prompting border officials to warn that suddenly everyone is going to be LGBTQ. The legislation introduced last week would make it more difficult to detain illegal immigrants if they are categorized as, quote, vulnerable persons. The wording of the legislation, titled The Dignity for Detained Immigrants Act, makes it clear that anyone who is lesbian, gay, bisexual, transgender, queer, or intersex is thereby subject to a greater risk of persecution and discrimination in their home countries, and so should not be. I'm sorry, is LGBT discrimination a big problem in Latin America? I mean, I don't think that they're pro-LGBTQ in Mexico, are they? The legislation also asserts that migrants with limited English language proficiency are also more vulnerable and could qualify for the special status. you know what? Well, you know what's going on here, right? Is Democrats are coming in and they're thinking about immigration, and they're like, allowing people to immigrate into the United States helps those people. So we should try and let as many people immigrate as possible so that we can help as many people as possible, right? And what they're not thinking about is what the rules that you set up affect the kind of immigration that you get and the effect that it has on the country as a whole as a result, right? And especially if you set something that basically anybody can say, oh yeah, I'm totally gay, right? Like you gotta set, if you're gonna set a qualification like that, it's gotta be something that is like difficult to verify, you know, or I mean difficult to fake, you know, easy to verify and difficult to fake, to limit. Otherwise, everybody's just gonna use that. And it's already happened now like 2 or 3 times with different things that they've done on border policy. Well, I don't think there's any chance that that would pass, but still it's kind of a little bit telling about how they view immigration. Immigration is the sleeper issue in the 2024 election, I think. Like right now, people, I think, are going to be much more interested in the in transgenderism, and the economy, and the debt, right? Especially those are the things that I think people are going to be most interested in. But there is a real crisis going on in the border, and a lot of Americans are very upset about what's going on with the border as well. And it could be a sleeper issue. So this is where I keep when I come down and I look at the issues, because it wasn't like this with Donald Trump, right? With Donald Trump and looking down at the issues and stuff, it was, you know, like the Democrats had a lot of parts of their platform that looked pretty good, right? But it seems to me that since Joe Biden has gotten into office, that the Democrat Party has moved on to much more liberal issues that the American public is not so much in line with. They do a really good job at like kind of focusing them, right? Focusing their on the things that they think are like, oh, these are like things that Republicans are doing that are obviously evil. But they're not talking about like the actual policies that are going through here that the majority of Americans would oppose. Wow, we came back to 03 awfully quickly there, didn't we? So I guess I talk about it in part because I'm triggered by stuff about the border, because I remember being a missionary and there was a lot of Hispanic people, and I felt that the way that we were doing immigration was very okay, this is the thing this is why it triggers me. Okay, this is why it kind of pisses me off, is that Democrats come in and they say, well, we need to do these things to help these people. They're coming across the border, and letting them into the United States will help them, right? But my observation was that the way that we had our immigration system set up was not helping these people, that it was encouraging people to put themselves in a vulnerable situation in the United States, and that it was a very immoral thing to be creating this kind of end run around the immigration system, right? Yeah, it was an LDS mission, and I was only Spanish speaking for like a month or 2, 6 weeks, a month and a half, I guess. But you know, I only talked to Spanish people at the time I got to the point where I could understand what people were saying, and almost everybody that we spoke to were illegal immigrants. Okay, and I think what they were doing, what is going on there is wrong. Like it's not good to bring a bunch of people in the United States and then keep them in this semi-legal status, right? Or semi-illegal status, right? You're creating an underclass of slaves, basically. And it's so wrong. It's so wrong. And not only that, but it has negative impacts on the countries that these people are coming from. Like, it kind of prevents some of these countries from ever being able to like build their country. And because anybody that has an entrepreneurial spirit, anybody that's willing to take risks, takes the risk to cross the border and come to the United States, and so they're never able to build their economies. It's not helping these people. It's not. And it really frustrates me, man. Democrats think that they're helping these people, and they're not. They're making these people's lives worse. The politicians are fooling people into creating an underclass. It's so messed up. Well, seems like a little bit soon for us to be going for new lows, but here we are sitting at 31.5 again. MS contract, what is that? There's somebody in chat. Please, someone help me. Why is NinjaTrader not allowing me to buy MS contract for $500? Is asking for 13K per contract? What is MS? If I search for MS, it doesn't give me anything. The closest it gives me is E-mini futures. Maybe he meant MES. Have ES is E-minis, and then MS is E micro E-mini S&P 500 futures and spreads. Is that well, if you're trying to trade MS and it wants 13K per contract, that would be wrong. But I'm pretty sure that NinjaTrader doesn't show MES as MS. Really interesting to me, by the way, you know, there was some downside action after the GDP print, and the treasuries are staying down here, but the S&P 500 is not. S&P 500 is still kind of maybe floating to the upside, actually. The E-mini essentially became the main. Well, yes, I'd say that's basically what happened. But I think a lot of that had to do with the S&P 500 moving up, and none of the instruments being at the margins or anything for the instruments being adjusted as a result, and that's why ES kind of became the main one. I would have preferred. I mean, I guess I understand why it happens that way, because people come in and trade a product, right? And so, you know, it's better for the CME to just create a new product. But what I would prefer to see is the tick size and so on and so forth for the S&P 500, periodically adjusted to account for the increased volatility that comes into the S&P 500 as we get a higher price. Like, to be more precise, there isn't a product over in the equities where like a one tick trade makes sense. And when I came into this market, a one tick trade in ES, you know, it's not something that a lot of people were doing, but you could do it, you know, because there would be times where it would just trade across one tick for a long period of time. That doesn't happen anymore. It moves way too much now. Agree totally. Well, so while we're agreeing, can I pontificate about something else? Circuit breakers don't work. They don't calm the market down. They decrease liquidity. They increase volatility. And they're just like an inconvenience to anybody trying to trade the instrument. The circuit breakers have not served their purpose at all. And you look at First Republic Bank getting halted 8 times yesterday. Like, it's just silly. It's silly. The rule, it doesn't work. It didn't work. You need to come up with a better idea, guys. Right? But probably nobody's gonna do nothing. You know what irks me is just that it seems like you're not able to change anything in the finance world. I mean, really, in regulations in general in the United States, unless something bad happens, then we can change it. So like if we know that there's a problem or something's not working very well, like it's going to continue to be there until like something really, really bad happens, and then maybe Congress pays attention, right? Yeah. So that's my rant for today. Oh, it's kind of, so it kind of looks like they could maybe touch 30.5. There was some volume hitting 31. So I think we've had enough volume at 31. There's probably some volume to go through at 30.5, but the bid at 31 just keeps recovering for now. So they're gonna have, the sellers will have to be much more aggressive than that to get it. Wow. Photo shows Biden cheat sheet with reporters full question given in advance. Really? Wow. Something that I see coming down the road in politics. I mean, like, you've always seen these kinds of things said by people online and especially on the right, that like the media is bought and paid for, that it really feels like we're living in a one-party state, that are just like two sides of the coin and stuff like that. And Tucker Carlson said a lot of that stuff in this monologue that he put out on Twitter yesterday, his first appearance since getting fired. I think it's going to become more of a thing, and I think it's largely because with Joe Biden, it's just so transparent, right? Like, the Biden administration is so transparently trying to like control everything, especially media, that it's just like everybody can see it and everybody's uncomfortable with it. Okay, so a little bit did trade at 30.5, but they were able to take 31 bid again pretty easily. Well, so where are we at now? We started before the news at 150. and we are now at 125. So we've had a 25k net sell. I was saying, I think I said 40k, right? 40 to 60k. I think that would be for the day, though. It might take a long time for them to get there. Well, so let me come back out here. I'll kind of set things back down there so I can look away for a second. Is there anything else? El Salvador's Bitcoin City was canceled, but did it ever really exist? Yeah, probably not. What? Okay. Nassim Nicholas Taleb. Counterfeiting has historically been a serious crime, at par with murder, requiring the death penalty in England and France, the latter by abattoirage, or boiling the offender in a hot oil. Fake news will soon be treated as seriously. It debases civilization. Nassim, are you honestly advocating that we throw Fox News journalists in vats of oil? Because that's a little crazy. What do you think of other countries requesting to join BRICS? Well, I think that there is a group of countries that have never really been good on the United States, have never really been on the United States good side, let's say. And so, of course, they're always looking for any opportunity to maybe try and get the same sort of benefits that you would get from being on the United States good side. And so they think that by creating their own coalition that they'll be able to create that. The problem is, again, that the dollar has the status that it does because of the systems that we have here. So let me put it a different way. One of the things that people will say is like, so for instance, the Ray Dalio approach to this, which is like, well, there have been other top currencies, and then over time, another currency will replace them, and so on and so forth, right? Well, why does the reason that happens isn't because like one, I would argue the reason that happens isn't because like one civilization surpasses the other or something like that. It's because one civilization creates a currency that is more attractive for certain reasons. And in the United States, you know, it's because of our free institutions and the freedoms that we provide and the economic buying power that we have, right? So a lot of countries out there are saying, oh, well, if we create this, you know, block with the same amount of purchasing power, then we can be the dollar too. No, you can't, because you're still not like a free country. Nobody's going to put their money in the yuan with the expectation that if things go south, the Chinese government is going to allow them to take their money out of China, right? I think that other countries are going to create these economic blocks. Of course, they're going to have like, we're going to be in like a more multipolar world, but I don't think that it's really going to affect the dollar's place as the flight to safety currency, because there really is just not an alternative. I think other countries realize how the dollar could be weaponized without any oppositions. So yeah, so this is the big, I think it's on the conservative side of the aisle where we're talking about this, right? That we weaponize the dollar against Russia. Okay. So here's the issue that I have with this argument. Okay. Is people are treating this like this is some sort of out of nowhere big change in monetary policy that's going to have like a really negative impact on US monetary policy going forward, and so on and so forth. No, it's not. We've been weaponizing the dollar against countries for the last 50 years, guys. It's always been the case that if you come in and you start violating human rights and doing naughty things, that you get cut off from the dollar, and it's a big problem. How do you think that all of this stuff in Libya happened, right? It was weaponizing the dollar against Libya. We weaponized the dollar against Iran. We weaponized the dollar against Iraq before we came into there, right? We've always been doing that, okay? The only thing that's different is like Russia is the biggest country this has happened to. Russia is the biggest country that this has happened to, right? And you know, it would be one thing if it was like just all of a sudden one day we arbitrarily decided to cut Russia off, etc., etc., etc. But I mean, that's not the way that it went down, right? It was like Russia's like, we're not going to attack Ukraine. But the whole time they were planning on attacking Ukraine, and the United States was like, we know that you're thinking about attacking Ukraine, and that would be very, very bad. And if you do that, we'll cut you off from the dollar. And like Russia knew what was going to happen, and they did it, right? And so then they went in and they invaded a sovereign country, right? They invaded a sovereign country, and then frankly, after that, they started committing all sorts of atrocities in that foreign country, right? Okay. So I would say that if you are like, let's say India, for instance, okay? So India has nothing to worry about as long as they don't arbitrarily decide to invade and take over their neighboring countries. Like, it's that simple, right? So this idea that like the real economic powerhouses of the world are all of a sudden going to be like afraid and move their money out, I think is ridiculous. Like if you're in France and Germany, you're not concerned about the United States all of a sudden deciding to weaponize the dollar against you, because you're not concerned about trying to take over your neighboring countries. You know what I mean? So it just comes back to like, a multipolar world makes sense, and that to me is not like a consequence of the quote unquote weaponized dollar, right? That is a consequence of third world countries becoming modern. And if they have their own currencies, and it makes sense for them to have their own currencies, you're going to get a more multipolar world, right? But that doesn't change the dollar's place as like a place of safety and security, or quote reserves, right? So that's the framework that I would try and approach this stuff with, because what you're going to see on Twitter and Zero Hedge and so forth is like, go short the dollar now because the dollar is falling apart because it was weaponized, etc., etc., etc. And then anytime that things actually start going down, everybody flights into the dollar and you get destroyed, right? Like, that's the funny thing about it, is that I would be taking like the exact opposite trade. The more the more positive things get, the more positive the world economy gets, the less I want the dollar. Right? And they're saying, you know, if there's geopolitical tension, and then they won't want the dollar. But it's the opposite is what happens. There's like more geopolitical tension comes out because of something like if some sort of big conflict equal to the Ukraine war sprung up somewhere else in the world, I would be buying the dollar, not selling it. Right? Okay, so this guy answered. Okay, so I want to go back to what we were talking about before that. Uzi says, what are cries of misinformation aside from coping strategies for the fact that people who don't agree with you exist? Right? I mean, like here's the thing. I do believe I do believe that misinformation is a serious problem in our society, and the fact that misinformation seems to travel more readily in on the internet than accurate information is a big problem that is causing negative impacts in our society, right? But the issue is that everybody seems to be calling things misinformation that is not, and calling things that is true misinformation when it's not. It's just, you know, goes both ways. And the amount of revisionism that I see out there is just like so disturbing to me. So like, good example was yesterday and earlier in the week, both Fauci and Trudeau saying, oh no, we didn't lock anything down. I never shut down a school. There was never an order where I said to shut down a school. There was never an order. That is such a load of shit, and everybody knows it. Okay, Trudeau was so heavy-handed with the lockdowns and everything, and Fauci 100% was on board with the lockdowns. And if it had not been for those leaders coming in and pushing the lockdowns and so on, it wouldn't have happened. And then to come out and say it had nothing to do with you is such a load of shit. Everybody knows it. It is a blatant lie. They're trying to revise history, and it is so scary. And then what happens is, like, you go out and you say, well, Justin Trudeau, you know, pushed lockdowns, and then somebody will come out and they'll do fact check. Trudeau said, no, I didn't do any of that. Right? And that's how it works. The issue that you have these days when trying to prove things, particularly when it comes down to the issue of history, is that we rely on the news as being our record of like what's happening. And when those people of record are not reliable, how do you deal with that? Right? When they're wrong about things and they lie about things that were true, and they lie about things that were false, it's ridiculous, right? There's no, and you're totally right. Like, I want more accuracy out there, but what Taleb is talking about is basically like, okay, let's give the government even more power to prosecute journalists that it doesn't like. That's a dumb idea. That's a dumb idea. This is a terrible take from Nassim. This is where I think his politics really, he doesn't realize where his own biases come in and create poor takes and decision making on his part. On the other side of the argument is that in the US there was never a time where media wasn't partisan. Okay, so I wouldn't say that there was never a time when the media wasn't partisan. And I wouldn't even say it's not the partisanship that bothers me so much as it is like government control of media. There was a time when the media wasn't like that, okay? But it's been like 90 years, right? Like sometime around the 60s is around the time that the government started doing this, right? A media is literally made up of former intelligence officials and spooks. A lot of media is, yes. I don't know what to do about it. Tucker Carlson did his thing yesterday. I really, you know, I have mixed feelings about the Tucker Carlson thing, okay? Don't get me wrong. There have been things that I've seen Tucker Carlson say, especially some of his takes on the Iraq war, that I did not believe were accurate. That I think, again, it's like one person's bias coming out too much. I think that Tucker does in his heart believe in trying to provide accurate information, though. And I don't see very many other people in media that I actually see that genuine approach from. I think the one on the left that I think is most like that is Bill Maher, right? Because Bill Maher doesn't seem to be afraid to tell people, you know, how stupid some of the stuff they're saying is, right? And it's okay to me to say, oh, Jimmy Dore, I've never heard of them. I think it's okay to have media that's partisan, right? Because if there's really partisan media this way and there's really partisan media this way, and they, you know, I can go and I can watch them both, and I can look at the actual data and come to my own conclusions, right? Where we have a problem is when you have this media that the public believes to be nonpartisan. Like nobody out there thinks that Fox News is nonpartisan. Nobody out there thinks that MSNBC is nonpartisan. But there's a lot of people out there that think that NPR is nonpartisan. And I tell you what, NPR leans very much left and pro-government. It's so much so it's nauseating. Right? And all these people think that it's like an even news source. It's crazy, right? Because it's NPR. They should be unbiased, right? No. They're not, right? And that's what I'm saying. Again, like the issue isn't that there's like, okay, most of what happens on Fox News is not news reporting, right? It's opinion, right? Tucker Carlson gets paid to provide his opinion on what's going on, right? The problem that I see is that the actual quote unquote news reporting is biased, right? That they are the people that are supposed to be doing the investigative journalism and are uncovering data that would be for us like the quote unquote empirical data that we could use to make our decisions about what we think is going on in the world. Those people are lying to us about things, or are being very biased in what they choose to present to us, right? That's where I say there's a big problem. Is how can, right, when it was like McCain versus Obama, it was like, well, yeah, there's people had these opinions, but it wasn't like they were coming out and reporting on things and they're just completely lying about it, right? Like you could come out the Nord Stream pipeline and it's looking like that the United States was the one that blew it up. And they're just outright lying about it, right? Like, it seems to me like what's going to happen with that one is in 5 to 10 years, we're going to find out that, yes, the the Biden administration did blow up the Nord Stream pipeline, and it was something that they had been planning since the very beginning as a contingency, and then they went and they did it. And then they outright blatantly lied to us about it. And by the time that we're able to find it out, Biden will have already passed on. And certainly nobody's going to prosecute him for it, right? That's where I have problems. Because what I want to make decisions based on empirical data, and I can't even trust the supposed empirical data that I'm getting from the media. In my experience, leftists are the only ones who don't see their own media as partisan. Right-wingers tend to understand what right-wing media is. Yeah, I think so, maybe. I mean, I think that's because the talking heads on the right are much more prominent, like Rush Limbaugh, for instance, right? I don't think that there is any talking head on the left that has such national prominence, and so the right wingers are constantly seeing the leftists complain about their media, and that's why it's like that, probably. Russell Brand, yeah, I think I tell you what, Russell Brand has a couple of really good things to say. I still think he has a couple of dumb takes too, but see, my issue with Russell Brand is that, like, he seems to see where all of these problems are, but then his take is like, really would, what he thinks we should do about it really does just lead us towards socialism. It's like, I think one of the things that you get from Russell Brand that's probably important to bring into here about this is that, like, when we talk about this, like, complex, right? So have you seen Matt Taibbi and the other guy that were reporting on this story with Twitter and stuff like that? They're calling it the censorship industrial complex, right? I think that's totally it, right? The media has become what it has become, not because of government coercion, but actually because of corporate coercion. Like, corporations have a monetary interest in the government line being towed. They're able to get government and corporate interests to align with each other, and then the media has to go along with that in order for them to make money. Yeah, it's the corporate industrial complex, totally. And what we need to do in order to break that, I think, is that you need to make it so that it's more profitable to put out true, groundbreaking stories than it is to toe the line. And right now, it seems like that's not the case, right? Right now, it seems like that you have to be careful about every teeny tiny little thing that you say, right? Like, I speculator Seth, probably would not be a good choice as a front man for a lot of brands out there, would I? Right? Because I talk about political things. Yeah, a lot of politics in me have become, don't offend the evolving consumer. Yeah. Right. So, like, if I was going to do a daily show for Ninja Trader or something like that, right? And then I'm go off about immigration or something like that, right? It's a risk for them, right? Maybe I could at some point go and be the finance guy for a conservative online news network. I don't know if I would be the best pick for that, but maybe something like that would make sense for. But you see what the point is just that, like, even talking about some of these things, it's like it's dangerous to your brand. in other words, me educating you to try and help you be the most informed to be able to interpret what's going on in the world, because that's important to our trading. The process of doing that, it makes us less attractive to certain types of advertisers. Are traders more right or left leaning? Oh boy, I'm not sure, to be honest with you. I'm not sure. It would probably depend, I think, somewhat on what type of traders you're talking about, because I tell you, like, the professional traders are by and large left wing. So I think that this is maybe one of the things that we're having a problem with right now, is that there seems to be a widespread economic ignorance on the left. And I think that it's because the people that are involved in the markets and really understand what's going on, because they work at these large institutions where your social media is extremely restricted. They're not able to tell their fellow people on the left, what the reality is. So they just let the left continue in on its delusions. And it's getting to the point where it's being harmful to the markets, right? There's two types of media consumers: passive, triggered by headlines, quick to join movements; aggressive, consume it every day, all day, and see it as a train instead of individual cars. Okay, I don't know if I have any comments on that. Okay, why for Mr. Grady the back and forth from market makers is manipulation, but momentum and one-way move is not? Okay, so I think that first that would have to come down to what is manipulation, right? Because just if I come in and I buy a lot of market, that's going to move the market in a certain direction, and to some group of people that could be, quote, manipulation, right? So when you're talking about I'm not sure exactly the sorts of situations that Grady is talking about, but let's just say that we're talking about a very micro things that we're seeing here on the DOM, like large orders in certain spots and icebergs and things like that, right? Is that manipulation? Well, I think that a lot of the time it is just execution. And to think of it as manipulation, as like it's some sort of a conspiracy targeted at you, is probably the incorrect way of thinking about it. But rather, the way that I would think about it is that there are certain things that are going on in the market that are certainly not in your favor, right? And I don't think that you should look at it as like the market's out to get you per se, even though that could be happening, and I certainly feel like that's what's happening at sometimes. But rather, I think it's more beneficial for the trader to think of these things as a force of nature, right? Is just like in the movie Bambi, right? Is Bambi's mother dying a conspiracy by the humans to target Bambi and kill his mom? No. Mom knows that it's a bad idea to go out into the field. She went and she did it because they were really hungry. And that's the way that the nature works, is that all of the food in the safe places goes away, and so you have to go out into the dangerous places to go and get the food. And then you have the risk of getting shot. And that's the way that nature is, right? And the human is just playing his part in the natural, or the predator, or whatever it is. He's just playing his part in that system. And the same thing happens in markets. So trying to think of it as like a personal thing doesn't really help you, right? But it is important to realize that there are certain things that are going on in the market, certain behaviors and except that are not in your favor, right? And that, you know, when I see those things, I don't want to play. Why is this market IA flying? I don't know. I'm honestly, I'm not entirely sure why the S&P 500 is buying here. Is Bambi getting people triggered? You know what? I think that Bambi might trigger me. I don't, you know, like, I can't even describe what the emotion is that I feel about it, but like, I certainly seem to feel something about Bambi. Because I watched it a lot when I was a little kid. That was the movie that they would put on to put me to sleep. And so I almost always, when the fire come on, that's about the point that I would fall asleep. Right? I didn't realize, you know, like when I was watching that as a baby, that movie was already like 20, 30 years old, actually. You know that? This is crazy, right? Bambi. Let me tell you about Bambi. Bambi is the story of a badass. That's what that is. Is like this guy, he had a tough upbringing, lost his mother very, very young, but he overcame it and he protected his girl and saved a lot of other people in the forest. And that guy, Bambi was supposed to be something to aspire to for men. I don't think you're gonna see very many people these days talking about Bambi. But why? Because Bambi was a badass. I don't want you to be a badass. But the reason why Bambi might be an interesting story for us to think about within the current cultural context, because here's how I see things, is you have all of these millennials and Gen Z people, right? And they've gone through school, they tried really hard in school, they did good in school, and then they go out into the real world, they work in the corporate world, and they work really, really hard, right, in the corporate world, and then like they don't get the promotion. And they're like, what the heck is wrong? I worked hard and I didn't get the promotion. It's not worth it to work. This is messed up, right? Well, the problem is that you've lived your entire life in this bubble that is the school system. So I'm not really super interested in all this conspiracy stuff about how the school system was created and that it's there to make you obedient workers and things like that. Like the reality is that the real world has always been very different from the world that you have in school, right? The world that you have in school, especially in the United States, is if you go and you do all of the work, you're going to get good grades and you're nice to the teacher and the teacher is going to like you. And that's going to help your status in the classroom or whatever, right? You go out into the corporate world and do that's not going to work. Okay. Like you go and you give your boss an apple, everybody's going to hate you. Right? Oh, you're trying to brown nose the boss to get yourself ahead, I see. Yeah, that's not gonna make your colleagues like you, right? You go out and you do all of your job at work, you're gonna get threes. Like at school, it's like you get straight A's and everybody's proud. You do that at work, and they do the end of year reviews and they scale you on a scale from 1 to 5, right? And everybody gets threes, right? And then you're like, well, why am I not getting promoted? Well, because the reality is that they have an incentive not to promote you. They don't want to pay you more than they have to, right? And the only way that you actually end up making more is if you have something that you can leverage, right? Like if you have a valuable role in the company and they really need to keep you in your knowledge and experience, and you're going to go somewhere else, okay, now they're going to be interested, right, in giving you a promotion. Right? And how do you get that sort of thing? You have to talk to people, right? So all of these millennials, they think, oh, if I just go and work hard, then they're going to give me the promotion. No, it doesn't work like that. You have to like talk with them and like set expectations and negotiate and push for those things and work the system if you're going to do that. And why is that? Well, because the corporate world is competitive, right? And what does Bambi teach us? The world is brutal, man. The world is a brutal, competitive place, and nature will come and eat your mom and doesn't give a fuck about you. And the problem that we're seeing a lot of the discouragement, especially among millennials. I don't think that Gen Z has been around quite as long for us to see how that's going to go for them. But especially for millennials, the reason they're feeling like that is because that's the way that the world is, and we shielded them from it, right? We told all of these people, when you're a kid, here's school, and then you're going to go out into the world, and it's going to be just like school, and so they want to go out into the world because they're told that that's what's going to be fulfilling to them. But then they get out there in the world, and what they realize is that we were protecting them from the world the whole time as a privilege, right? That's the way it is. Are you shocked at my ability to turn Bambi into an important life lesson? Because I feel like it's like Bambi is one of the important life lessons that like people in our society right now are missing. Especially if I can be a little bit controversial here for a moment. I think it's a message that women in particular could use, because I'm not saying that women shouldn't work and won't be. Oh my gosh, I forgot to turn my light on. I'm not at all trying to say women shouldn't work or that they'll be happier if they don't work or anything like that. But what I am saying is that this whole perspective of like the men have created the patriarchy, and that's there to keep women down and so on and so forth. That's not it, man. We didn't make this stuff. Men did not make this stuff. This is the way that the world is. And from the beginning of history, we've been shielding you from it. And if you want to go out into that world, then great, because that can be very fulfilling. But you're going to have to realize that it is very different from the world that you grew up in. And it's competitive and it's ruthless, and you might not like it. Because I see a lot of women, they get into that world and all of a sudden things are competitive and they don't like it and they get very discouraged, right? Well, go watch Bambi first. or same with the market, right? You're a trader, they come in and they think that trading is just going to be about, I'm going to see this pattern and come in every day, and they treat it like there's this well-structured system that I'm going to get inserted into that's going to be just like school, and then I'll be able to become a millionaire from it. No. Trading is the Wild West. It is nature at its core. It is competitive. It is brutal. And if you insert yourself into the market in a situation where you really shouldn't be getting involved, where you don't have an edge, you're going to get eaten. And if you go out there and try and eat the grass in the meadow, there's risks of doing that, folks. Okay, have I weirded you out enough? It was probably too much about Bambi, but you get what I'm saying, where I'm like, it seems like I have an emotional reaction to Bambi. I think it's because it was as a kid. And having your mom die, that was always traumatic for me. Bambi, and you know what the other movie was? Land Before Time. Oh my gosh. I think that movie messed me up, to be honest with you. I think that movie messed me up. I think that movie created an anxious attachment within me. with the mom dying and everything. It's so heavy. Like in Bambi, at least the mom dies like halfway through the movie. Land Before Time, like that's at the very beginning. Oh, and it's so sad. Yeah, that movie traumatized me. Definitely traumatized me. So you know what? After that news, so like we got in this at like 6:35, something like that. And early on, it was difficult to hold that trade. When did we get in? 6:33. Okay, so almost 4 minutes after it. There was a period where it was like, is it ever going to get a new low? Okay, they made a new low and then they came out and like about the time the S&P 500 came in, right? It was kind of like slowing down. But since that time, it's just been steadily dropping, man. The cumulative delta in the 10-year treasury is actually somewhat flat, still around 125, but it keeps dropping. So it looks to me like the market knows from a fundamental perspective that interest rates have to raise considerably from here. They may not necessarily have the volume to do it very quickly, but so the market makers are just like slowly adjusting their price down. That can result in situations where you get really strong trends that if you're only watching the order flows, you're constantly going to be looking for reasons to get out, or that it's going to reverse and try and reverse it and stuff like that, right? But it just keeps going like a slow motion train rolling down a hill. That said, it's a pretty big order amount of volume that's kind of been rolled in front of it at 27.5. How much time do we have left? 8:30. The other issue we've got here is that there is an auction today, right? And yesterday, the markets sold quite a bit ahead of the auction. And I'm not seeing anything here to be like, it stopped. I'm trying to work this out. Like, we have an auction. Tomorrow, we get PCE numbers that we're concerned because of this number could be bad, right? I could try and hold this to that. I don't anticipate that the auction will cause significant buying. Although, with the way this has gone through, nah, I don't think so. So I've been traumatized by these kinds of trades before as well, right? Where like I've got a really good trade and a really good runner, and then it like retraces by 50%, right? But the market doesn't seem to be showing that kind of volatility. I don't think that I need to be as worried about that. Oh, just got the oil numbers, by the way. Discord added a new feature that allows me to filter out bad words and usernames. Block specific language in your members' usernames. Oh yeah, and advanced regex matching. I think I'm going to keep my filtering on there because it's fuzzy. But that's going to help so much for Discord for so many other people, because I'm sure that lots of people are dealing with that kind of scam. I do have to wonder what the S&P 5, what is driving the S&P 500 right now. Is it earnings? Let's see here. Spot gamma. For traders focused on short-term, a 0 day to expiration, most major risks appear as, quote, tomorrow's problem, and you're all clear in the short term. Debt ceiling / bank / recession might matter later, but not today. Short dated flow is transient and impact may be misinterpreted as macro driven. Gotcha. So Spot Gamma is saying this appears to be another technically driven move, and it has nothing to do with the fundamentals, even though you might be tempted to think that. Okay, it looks like we're going to have something happen here at 28. So we got a big iceberg at 28, and then there's the big order at 27.5. Oh man, this is a tough one, because it's just like I was saying, like this is a situation that might create a reversal, right? For me, I really have to consider it, because I hate trying to hold a position open all day. 28 is the volume point of control, and it's a 2000K market order, or order there. Oh, it's been there for 2 weeks, really? Wow. That's interesting. Now that's interesting. So the thing that I'm trying to, that I have to consider right now is it worth it to try and hold this open until Friday, and then if Friday goes well, hold it even longer? Or is it not worth the drama and get out of it? And I feel very conflicted about it. On one hand, this seems like a really good situation to try and hold it. I don't know though if you'll, if the numbers tomorrow end up being bad and everything, the move today probably blunts the impact of that a little bit. So I don't know if you get a whole lot more out of it. Certainly though, after that, we could have even more next week. And then especially with the Federal Reserve meeting and everything else, and like we're getting, we picked out some pretty low rates. Like we're at 3.4 at one point, and I think this is likely to go to 2.6. Sorry, 3.6, if not 3.7 and above. The issue right now is that you're still seeing some inflationary looking data, and so then we're gonna have to start thinking about hikes in the summer as well, instead of May being the last one. That could really move the market aggressively up into the 4% range. Now you're getting the level break set up at 28. Also, some big offers up there. It's doing it in the 5U too. Let's center things so we can see if they go for it. They're not all okay. Okay, so they traded 28.28 to clear that big order at 27.5. There was a few stops at 27. Last time we did this, it was like I did a poll and you guys said hold it, and then afterwards I thought better of it and I got out. So thinking back to that time. See, this is me. Like, I don't have the same kind of voice in my head that most people do. That's like, okay, well, this is what happened last time and yada, yada, yada. Okay, so one thing that I see here. Oh, there was a pending home sales number that I wasn't paying attention to. Oh, it was bad. -5 spot 2 versus spot 6. Okay. I don't. There wasn't really a reaction to that though. Oh no, there was. That was kind of the move down after that. Okay, I don't remember my news squawk saying anything about that at the time though. Now, what's this? I got something from John Grady. If you want to beat this game in the long run, you have to understand what these large firms are doing. The reality is they have far too much money and can frequently move price whenever they want far too easily. The trick is anticipating what they're going to do next. Yes. Yes. Oh, John. Thank you. That's it. That's right. 100% right. Love that tweet. Love that tweet. Where are you? Come here. Okay. Here's the daily baby watch period. Heavy hitters finally buy into new highs. That triggers buy stops. Institutions liquidate into the stops. Price stops moving higher. People chasing the move get stuck wondering why it happened. That's why now they are back to playing both sides. Yeah. Anyways, when I did this last time, like I got scared out because I hadn't considered what was coming up, and I was like, oh, I don't think I want to play that, and I don't want to play that. And then it would have been an amazing trade, so I should have kept with it. So the first thing is if we're going to try and hold this, so we should think about what we've got coming up that might affect the flows, right? So we got core PCE price index tomorrow. That's a pretty big number. Some of what we got today might blunt some of that, but I still think that there's a good chance that that could continue moving us down. We have a 10-year auction today. I don't know what the 10-year auction will bring, but you know, I haven't really seen too much of an impact from that so far, right? Like we just had a really big order at 27.5 that's been sitting there for a while. It looks like they traded through that just fine. Okay. Then if we are able to keep it through to Friday, then we have to think about next week. So next week on Monday, we've got ISM manufacturing PMI. So that's another key one. Now, the problem with those is that those have been kind of looking bad lately, but there's also some information about prices in that. So that could help us. Then on Tuesday, jobs openings, factory orders. See, once we start getting into the employment data, well, because I don't expect non-farms next Friday to be too good, right? So I don't know if it would make sense to try and hold it all the way into next Friday. It might make sense to hold it into Monday, though. Or it might make sense to hold it and close it at the end of the day on Friday. Or actually even better, we'll get a news spike and take it off on the news spike. There's also some key places, like once I get to about 70, it's usually hard for me to get a trade that goes more than $70, so. Still got 20 minutes here, though. You guys went real quiet after the Bambi thing. Did you not like hearing about Bambi? Wait, let's come in here and look. Let's look at the stats. Nah, you're fine. Bambi's fine. It's just a normal aberration. You know what I've noticed though in the community overall? Discord's been a little quiet. Chat's been a little bit quieter since the FRC thing. Of course, it could always just be our channel and everything, but it really seems to me. Well, and I haven't posted anything in a while. Oh my gosh, there's a baby crying. And he just moved over and quieted down. He didn't get up, so I'm gonna wait. Try and let it play out. Anyways, I do wonder if market interest died down after the FRC thing. I'm sure that a lot of retail traders got creamed in all of that volatility. I kind of think that maybe a lot of traders became disenfranchised after that. Or disenchanted is probably a better word. Disenchanted after that. What do you think? You think that a lot of market participants left after that? Oh, so here's the story. Yesterday, Bitcoin dumped really hard. Zero Hedge finally has a story about that. So let's try and read. The price of Bitcoin nosedived over 8% in less than an hour yesterday afternoon, which media outlets reported was due to blockchain analytics firm Arkham Intelligence incorrectly sending out an alert that wallets linked to Mt. Gox and the US government had begun shifting large sums of Bitcoin. Arkham initially tweeted to confirm the alleged mistake had occurred as a result of a bug fix, which sent out a false alert on their analytics platform to a small subset of users. The alert was subsequently tweeted by the popular crypto news alert account DB or Tier 10K. However, 1 hour later, Arkham published a follow-up tweet claiming that it had conducted an investigation of the DB alert situation and determined that the Arkham alerts were sent accurately. Neither the alert nor the tweet could have caused the sharp BTC price drop today, highlighting that the drop occurred between 1970 and 2001, and the alerts and subsequent tweet were sent afterwards. Additionally, according to data published by Twitter user IT Tech, there have been no transfers from the wallets associated with Mt. Gox, suggesting that Bitcoin's flash crash could have occurred for reasons unknown to market participants at the time of writing. According to the data from Blockchain Explorer, blockchain.com, a Bitcoin address believed to be the US government's wallet for Silk Road hacked funds did witness a transaction on April 26. However, it was an inbound transaction worth only 19 cents, which was still processing at the time of writing. Okay, the baby is full on up, so I'm going to go and take care of that. Okay. Oh man, what's with the grumpy face? Hey, look where you look at you right there. You see you there right there? Yeah. If you talk into that, they hear you. They'll hear you if you talk into that. Yeah. I've decided I'm gonna get out. What I'm seeing right now is there was that big order 28, 27 half. We're probably gonna be going sideways here for a while. We could go lower later in the day, but by that time we're thinking about the auction and things like that. I think that I caught the best of the move, and I'm not really convinced that what happens tomorrow is gonna move us that much further. So I just paid for the month right there. I should be pretty happy with that. You talking to that? You say da 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 da. Got him to do it. Good job. Oh, you know what? I forgot I have this one over here too. I'll do 500. Okay. Yeah. So remember yesterday when you guys were like, hey, good job on that exit and all of those sorts of things. And I was like, well, wasn't really that good of a trade and yada, 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 yada. That was a trade I can be proud of, I think. Right? Understood the situation. I was able to stay calm and deal with some of the issues that I've been dealing with, right? Because there was several times during that I really felt like giving it up, bailing on it, but I understood what the flows were in this situation when I was able to hold on for a pretty good $40 winner. Yeah. Oh, you hear Mom? She just came back. What is with these pajamas? Is this supposed to be a Mickey Mouse shirt, but it's kind of reddish? Kind of an orange red. Well, I think it is red. I don't know. I'm not the best with colors, okay? That looks red to me, though. No, don't touch the microphone. Just talk into it. Anyways, you know what else is that we'd been in a bit of a drought. It's been a while since I caught a really big winner, right? And before that, it had one day that was really bad too. So that's really good. And we paid for our data fees and everything this month. So I don't know if it actually makes. No, I think it does make the month profitable. Hold on. Let's investigate. Oh yeah. Hold on, let's make sure that we got a whole month. That's what it's showing me right now is just like a few weeks. Oh, dude. No, that's not. That's showing me all of my sim trades. Okay. Show me. Hey, that's not bad. That's not bad. I made $67 this month. Wait, what are our stats? I hit a 50% win rate? That's really good. 50% win rate, and my winners larger than my losers. That's exactly what I want. I really would like to get like that MFE to like 2 times my MAE. So still some work, still some, because you know that winning trade is just a month, and that can fall. I'm usually not 50%, right? So still some concerns in my stats, but that's still a pretty good month I can be proud of. Of course, we got like what, one more day? Or is there Monday? No, there's 30 days in April. That's something I should memorize, is how many days there are in the week in each month. Because I think that's one of the things that prevents me from memorizing what day it is not knowing which day it changes to the first. Oh, we get Kansas Fed Composite Index at the top. Have to disagree. Okay. John Grady. Okay. John Grady's on a tweet storm this morning. I'm on a roll and in the mood to educate. Look at the volume profile. There's not much between 850 and 950 because the firms aren't selling there. They only buy there, triggering the move. Then they dump into the buy stops, then scalp back and forth again. That's the game. Oh, I'm not sure about what I disagree about. I'm just playing right. Oh, okay, good job. If you really want to hear me argue with people, we can always go out, get Ace to come back. Then we can argue about over whether, you know, like lockdowns were justified or not, and whether they lied to us about the vaccine or not. I mean, I'm a little bit miffed about how some of those things kind of came out in the end, aren't you? I moved away from Grady's point of view about markets. Well, he said one. So what he just said there, I'm kind of like, So here's the thing with John Grady. Number one, I don't know how well he actually does. It seems to me, and I see this with a lot of educators, is that there's a lot of things that they don't know that they know, or they don't know why they know, right? Like where I think our microstructure research is the most valuable is that it's able to explain some of those things, you know, that have kind of always been these big question marks. Of course, at the same time, it also kind of says to us, you know, that maybe some things were kind of oversold. Like, I think that John Grady has a read on the order flow, but John Grady also seems to believe that there are short-term advantages to it, and so on and so forth. And I'm of the opinion that whatever kind of advantages that there were in that type of trading are gone now, right? So when he came out today and said, so you missed the earlier tweet that he had, but earlier he said, you know, that these big institutions, they can move the prices very, very easily. And so it's really all about just knowing what they're going to do before they do it. Well, let me see how they said. If you want to beat this game in the long run, you have to understand what these large firms are doing. The reality is they have far too much money and can frequently move price whenever they want, far too easily. The trick is anticipating what they are going to do next. I think that's 100% the approach that I take. The informed trader speculator approach is knowing what's going on in the market and being able to predict what these large players are going to do before they do it. Speaking of advantages, Seth, how do you like Financial Juice? I love Financial Juice. I'm not going to say that Financial Juice is the best news squawk, but it's the cheapest news squawk, and you are definitely getting value for your money. You're definitely getting value for your money. I'm tired of Financial Juice giving me the fear/greed index. Yeah, I'm not a huge fan of the fear-greed index either. Totally right. So I'll tell you one of the internal struggles that I'm having right now, though. I continue to find that some of the best information that I find comes from Zero Hedge reposting some of the analyst reports from like Mr. Flood at Goldman and Flow analysts and that sort of stuff. And while they do give, you know, with a regular subscriber, you do get a peek into that sometimes. It seems like the best information is kept to the people that are doing the $100 subscription. And I'm like really kind of like on the fence about whether I want to spend $100 a month on that or not. And of course, with Financial Juice, I'm a lifetime member, so I don't have to worry about that. But if I was spending $100 a month on Financial Juice, I think it would be a difficult decision for me to decide between spending $100 on Financial Juice or $100 on Zero Hedge, you know? Part of that is because the liquidity during news events in the treasuries is still really rough. So you can't really trade immediately after the news like I maybe could back when I was trading live on CN and there was a lot more liquidity. So I think that makes Financial Juice maybe slightly less valuable, but it's still like news events is a big enough flow in the market that you have to have something there. You really do. And I don't think that Twitter always covers it, so I'm still really high on Financial Juice. And I have an affiliate link in there, and if there was any product I could recommend on this channel, it would be Financial Juice. Financial Juice followed by Jigsaw Journalytics. That's the other one. So the Journalytics is probably the most slept on service out there. Because even if you're not using Jigsaw, you can use their Journalytics, and I think that the stats you get from Jigsaw are better than... I don't know if it's always the best with how it integrates. I've heard some people that they're not using Jigsaw. They weren't perfectly happy with how it integrates, but the stats that it gives you are the best. Why did I scroll down there? Yeah. Sometimes I'll like scroll it and then not scroll it back. I'm like, what am I doing? They started to move back down a little bit. I should clear up to the upside. It's time for me to go. You made me lose track of what I was doing. Hey, so let's yields spike on stagflationary GDP data. Yeah, use the video description, the affiliate link in the video description if you're interested in Financial Juice. Okay, I gotta go. I'll see you guys tomorrow. In the meantime, stay excellent, team.